Welcome to Realcast, the weekly roundup of the real asset markets. My name's Richard Betts. I'm joined by Nicole Dines, Paul Strome and Dan Innes for what is our 100th issue. Who would have thought that when we started this on the 3rd of April 2020, that 100 episodes later, we would still be discussing the pandemic, but also, interestingly, a number of other black swan events that have come up over the time of Realcast. Let's start anyway with our kind of regular pick up on the news, but also maybe add into that some of the key things, I guess, that we've seen, key themes over those 100 issues. Nicole, let's start with you.
On a positive note, coming out of the pandemic, one of the positive things has been the comeback of tourism, of travel, and of course of hospitality. And CitizenM, which are the pioneers in sort of affordable luxury with a very new concept, they already have 18 properties in Europe, but they're very much they're expanding. They announced that they're going to open a new hotel in London near Victoria Station. So their model seems to work very well, very much based on innovation. And recently they announced that the first hotel chain to launch into the metaverse. They're going to use this new virtual world called the Sandbox, so their supporters can use their non-fungible tokens to support the building of real hotels in the real world. So there'll be definitely a new concept and an interesting idea to watch. And again, on the news front, another big theme has been obviously impact, ESG, environmental sustainability, and Built by Nature and the Laudes Foundation have just announced they're financing further study into the use of engineered timber, giving 250,000 euros to research into this in Milan, in Mind, which is the Milan Innovation District, which is being built, is over 1 million square meters of new buildings, and is going to become a technological hub. And most of it will be built in with engineered timber, thanks to this foundation. They're saying Italy is lagging behind a bit. In Northern Europe, it's become very much a theme. More and more buildings are being built, obviously in the Nordics, which were always had them, but in the Netherlands and in Northern Europe especially. But the trend is definitely being accepted, and the more people are looking at engineered timber, which obviously is one of the oldest materials in the world, but it's also highly technological. ESG has been a big theme for us over the last 100 episodes, and we launched Impact, a magazine devoted to that. And in the most recent issue of Impact, we devote a section to engineered timber to show how creative the solutions are being, technological but also creative, and all the benefits from an environmental point of view of building with engineered timber. So that's something that will grow and grow, I'm sure.
Yeah, and I think that that focus on sustainability over the past kind of 100 episodes, I think, has been really clear. And just interesting for me to note as well that in when we launched Impact, which was only in October, we had one page of people moves. And for this one, which is issue number 4, it's actually 4 pages of people moves. And that just really clearly shows what's happening in the market there, I think. Paul, what are your takes on the week and the 100 episodes?
Well, I was just going to highlight that Ikea franchisee Ingka announced last week this by allocating 3 billion euros to physical store growth. It wants to accelerate expansion in both new and existing physical stores globally. By the end of 2023, it'll spend 3 billion. With the aim of becoming more accessible for customers. And the group said in a statement that physical IKEA stores remain an essential part of its business model, and that since September 2021, 6 new IKEA, and it calls them touch points, they're smaller stores where online buyers can go and sort of see products before ordering online, have been built. And over the past 3 fiscal years, Ingka's already spent more than 2.1 billion in existing and new stores across 32 markets. So it's a good example of the way that sort of successful areas of retailing really are moving forward, adapting and embracing the new sales channels. And other stories in the last few days have sort of highlighted that too, including retail property giant ECE's sale of a food-anchored centre in Austrian city Linz to institutional investors, and Greenman signing up its latest food convenience store anchored development in the Koblenz area of Germany. Looking at back over the year, sort of symbolic of how the property sector is adapting to changing circumstances and how some of the solutions and shifts that it's prepared to contemplate are quite radical. It's difficult to imagine just a few years ago such a radical shift in the land use allocation in Canary Wharf, for example. And so where Canary Wharf Group and Koblenz Science Partner, which is actually owned by AXA, IM Alts, announced in March that they're to develop a a 750,000 square foot life science focused wet lab building at Canary Wharf. And it's billed as Europe's largest commercial laboratory building and the first phase of a life sciences cluster in Canary Wharf, which after all was regarded for a long time as an overspill area for the City of London and for offices.
Yeah, I think capital moving towards what would have been perceived as very, very small areas like life sciences, but also growing focus on senior living, on healthcare, and indeed infrastructure have been some of the key kind of themes, I think, around that as well. Dan, what have you been tracking?
Well, the big story of the week for us was really the reports that the West End of London could be seeing one of its biggest mergers of its two biggest landlords, Capital and Counties and Shaftesbury. They're in talks, apparently, advanced talks for a £3.5 billion merger that would really transform that area. I mean, there are some shareholder concerns, but Capco, they run the Covent Garden estate, while Shaftesbury runs most of the Soho landmarks, including Carnaby Street. Advanced discussions there, and definitely one to watch, and one that people have been suggesting would be a good thing for many, many years. Elsewhere, over to Scandinavia, there was the impressive news that in Oslo, the city's iconic department store, Steen and Strum, which is the world's longest trading department store, 225 years old. They've had the biggest March ever, which, considering we've just had that pandemic and those Black Swan events that you mentioned, Richard, is quite something. They made history this year. They exceeded their sales record by 20%. And that jump in sales before any previous March on record comes after Mark, or Mayor Bergman, who sort of leads on the promenade and management, which runs the department store. They invested into a major refurbishment and a new positioning of its main entrance onto the city's main busiest shopping street, Karl Johan's Gate, and the introduction of a new atrium and last year a new beauty hall. So a real great example of where investment is truly paying off. Following some of the trends that we have been following over these 100 editions, Richard, these pandemic restrictions that have forced businesses to get a little bit more comfortable with employees working from home or elsewhere, and what that's meant for real estate. Tesco, the supermarket group, they're actually partnering with IWG to open its first flexible workspace. So from later this month, the owner of office operator Regus, IWG, they're going to test out 3,800 square feet of flexible workspace in the Tesco's in New Malden in the UK. That's going to have 12 private desks, 30 co-working spaces. And that kind of tie-up kind of look emerges as supermarkets are now the asset class looking at ways to fill space in stores where they once sold, electrics and music and film, or, which are now bought digitally. And maybe that space can be put to better use. So maybe let's see how that Tesco IW venture runs. Separately, Landsec, this week they sold 32 to 50 Strand in London for 195 million. And that's a mixed use commercial building. They sold it to Sinamas Land Limited. And that comes at a time when Landsec, they were pretty much the talk of Completely Marketplace, the event last month, because they've been reducing their retail agency roster of 30 down to 5 agents in a bid to drive performance. And they've actually been following this kind of more brand and customer centric approach, which has certainly got the agency world talking. Back to Ingka, a reference that Paul made earlier. In Vienna, Ikea is opening its first car-free store, and the store is going to be solely accessible by public transport or on foot. But they revealed that the design in 2020 was going to be a response to the radically changed customer and mobility behaviours, and an ambition to create a more sustainable shopping experience. But customers don't need to worry, because they're still going to be providing their on-the-day home service delivery options. But this building in Vienna, it makes a really important contribution to the future of living ecologically in the city and to the future of retail. There was quite a touching initiative in Paris, which was a series of pop-up stores clustered together showcasing Ukrainian designs and products. And the pop-up in the 9th arrondissement in Paris showcases everything from fashion to design to sculptures to paintings, all created by Ukrainian designers. It's being supported by locals, and perhaps something that we'll be able to see elsewhere in other cities around Europe, again, driven and supported by real estate. And especially nice to see that after Ukraine won the Eurovision Song Contest, Richard.
Really interesting as well to be at the ULI conference in Brussels last week, because that was actually the very last major event before COVID really struck in 2020. And it put me in mind of the fact that we'd done around 30 or 40 different interviews there, all of which were very positive about the outlook. The fact that there were no potential black swans in front of the market. And all of those interviews, essentially, I couldn't use a week later because the world had changed enormously. But it has been very interesting to see those trends around work from home, changing some of the sectors, the continued focus on logistics, much bigger focus on residential, but also on those alternatives, as we mentioned. Just very interesting to see how resilient we've actually been as an industry. It's a whole wedge of black swan events that we've had. So not just COVID, but obviously the economic crisis following that, but also now the energy crisis, as well as the war in Ukraine. And yet still there seems to be quite a lot of positivity in the real estate and real asset markets. As an industry, it's helped support a lot during the COVID crisis, but also during the Ukraine crisis. And that links in again to that idea, I think, Nicole, around sustainability and social impact. And all of those areas, I think, have been increasingly important over the last 100 episodes of Realcast. Thank you, Nicole. Thank you, Paul. Thank you, Dan. And thank you to all of the contributors over the 100 episodes of Realcast. Thank you for watching us, and look forward to seeing you next week for our regular roundup of the real asset markets.